Good afternoon. We are live this March the 11th of for the latest edition of the Jack and Bill Show. I have a very special guest with me today, and Wesley has already warned me not to speak too loudly with the speaker this close, and I've already violated that right from the start. But we've got Rudy Tooty, Rudy Hines, and he's a special friend, and he gave me permission. How long have you been a client with us, Rudy?
32 years.
32 years. And do you remember how we met?
Uh, at a track meet. My son was running track at in junior high school, I think, and you came out there to participate in a
all comers
mile.
Yeah.
And you blew the doors off everybody. I mean, I don't think you've run in a year. I think you ran like a 4:28 mile.
That's about right. I think that's about what it was. Yeah. So then, and you were a general contractor at the time in the home building business,
commercial, and a little bit of industrial too.
Yeah. So it's quite frankly, we probably have some viewers that you may have built one of their houses or.
Don't call me if there's any problem.
So,
I'm out of the business.
So, but we've been and then now you're, I'm 61. You got me by a couple, and
I'm 65 now. Just turned
65. That's right. And you're actually officially retired, but you've got your hands in a few things. But one of the things, ladies and gentlemen, that Rudy has been a consultant to oil and gas companies and the pipeline space, and doing marketing, actually getting business in that space.
Correct.
Right?
Yes.
Yeah. So and now he's retired, and we talk quite often. But anyway, just to kind of give you a market recap. Let's see. I was looking at an email from B. Riley FBR's Mark Grant this morning. He's on CNBC and Fox Business quite regularly, and he's really kind of concerned about the markets, and was talking about the CPI print that came out yesterday. Consumer Price Index, in today's Wall Street Journal headline: inflation reaches a 40-year high of 7.9%. And it says gasoline prices have jumped 38% in February, year over year, from February to February. And food prices, or your grocery bills, up 8.6% year over year. And then there's some things like that I like Wagyu beef. You don't even see that anymore because they've doubled the prices. So with that, through yesterday, the Dow was down 8.71% year to date. The S&P 10.63%. That 10% level is what we call a correction. 20% would be termed a bear market. The Qs, the NASDAQ market, down 16% year to date. And but I was looking in today's Wall Street Journal. There's been a rotation since the start of the year. Like if you take the S&P 500, Rudy, and you take the lowest 250 PE ratios and then the highest 250 PE ratios, the Vanguard Group runs a value fund and a growth fund. And the growth fund is down about 15%, and the value fund is only down about 3%. So, and we actually kind of thought that we saw this coming, with valuation so stretched out in the low dividend or non-dividend paying common stocks, and we kind of rotated, that way. But so we haven't really suffered nearly as much as say the S&P 500 market participants this year. But we had, I looked last night and the Dow futures were way up. They captured in satellite imagery some of the Russian tanks north of Kyiv moving around, and they thought maybe headed back towards Belarus, but instead it looks like they've kind of repositioned, and the market kind of closed on the lows today. Let's see here. I see Russell 2000 down 1.6%. Crude up $3 again to 109. Bitcoin down 1.5% to 38,700. So the S&P closed at 4204, down 1.3%. It was just kind of fractional most of the day. And then with this news, I think traders really didn't want to go home over the weekend with fears of another, bad attack or whatever kind of news. Mostly, the news in Ukraine is driving the markets mostly right now. And whether this is short term or long term, then we're going to be focused on the domestic economy and what the Fed is going to do about these high inflation rates. So so Rudy, I just thought I'd ask. Just kind of wanted to have a conversation today, and did you have a question you wanted to throw out, or what's on your mind?
I'm just concerned probably what's going to take place 6 months from now. I mean, that's where I'm trying to position myself. I think things are
okay.
We kind of see what the picture looks like for the next month or so, because we know we're not going to get out of this Ukrainian situation. We know crude's going to keep going up, which is going to cause commodities to continue to go up. I talk to people in different sectors, and it's just continuing to go up on a weekly basis, not only on a monthly basis. And that's due to the fact that probably a year ago, we were importing probably 40% of our product like that. But since natural gas is so abundant in the U.S. and is extremely cheap compared to the rest of the world, that's your major feedstock for like ammonia nitrate. And so
okay,
with that,
and we've had some plays this year in that space that have done
right
quite well.
We've done very well. Yeah. CF Industries, Mosaic, LXB, a small company.
LX symbol LXU, it's up 89%.
Yes, been
year
very
to date.
successful.
I wish I had a lot more of that than we do. But that's interesting because we own. I was just looking through here and looking over. I just gave like year to date on the Dow and the S&P, and there are some algorithm run funds that we utilize in the commodity space. One of them's up 14.5% this year. Another one's up about 4%. Pipeline stocks, are up an average of probably 18%. Mm-hmm. And we own, we like those midstream energy. Most of them are in the form of master limited partnerships. Only bad thing is you have to get a K1 and you don't get your taxes done on time usually, but those are.
I think they'll continue to climb because the theory right now is with companies are wanting to give back to their stockholders and reduce debt, and so if you hear people like Energy Transfer, Kinder Morgan, you're not seeing a lot of capital expansion, but you're seeing more of getting their bottom line in better shape, which is good for the stockholders.
Absolutely. Yeah. And that's been a real kind of ethical dilemma for the energy space, by the way, too, because a lot of the CEOs in the last quarter have felt pressured by Washington to increase production, and they've wanted to increase dividends and buy back stock.
Right.
And so it's going to be, so you said you thought that crude was going to continue to go up. Then why do you think that?
Well, let's just say if we started a drilling campaign right now, you wouldn't see the effect of it for 12 to 14 months.
Yeah.
So about the earliest point crude could come down would be at that point. and
Yeah.
you just can't start drilling overnight. Not only that there's permit issues, there's environmental issues, but there's also a shortage of product. There's still supply chain problems out there. You got to be able to get
Right.
pipe. You got to be able to get valves.
Right.
And a lot of these have lead times out to 20 weeks right now.
Oh, wow.
So that affects everything in general.
Yeah. And then like when you look at, I filled up my, I'm a wannabe redneck, of course, and I drive a Dodge Ram. And it cost me $113 to fill up yesterday. I think that's the highest number I've ever seen at the pump.
I have a big Ford, and I filled up Tuesday, and they would only let me put $100 worth, and I didn't even get to a half a tank.
You've got to be kidding me.
Yeah.
How big is that gas tank?
And
that's got to be like a 50-gallon tank.
It's close to 50 gallons.
Yeah, that's wild. So, yeah, and I was just looking at this. I was showing Rudy our a spreadsheet that we have that Bill, incidentally, I think Bill's likely watching.
He is. He goes, Rudy.
Oh, cool. So
That sounds
Bill,
about like my football career.
I got permission from Bill. Prayers out to Wild Bill. He's laid up at home. Day before yesterday, he had a complete double knee replacement. And
just watch those spasms in your thigh. You're going to cry when they happen.
Yeah, I mean, he's going to cry when he has to do the rehab too, because I've had a knee replacement, and the rehab is not fun. Trying to get that range of motion all the way back. But anyway, that's another story. So this is why I about an hour ago I called up Rudy and said, "Hey man, what are you doing? Can you put a shirt on and come down here and jump into the Jack and Bill show?" So, but we felt like it was important to do something today, given just the extreme. Most of the days of the stock market right now, today included, are 1% or more changes, Rudy, on a day-to-day, basis. So, and I was showing you this today too. I think we showed this graphic recently, but the CPI numbers have been climbing from March the 10th of 2021, 1.7% to 2.6, 4.2, 5.0 to 5.4 to 5.4 to 5.3, 5.4, 6.2, 6.8, 7.0, 7.5%, and then this most latest print, 7.9. And I actually think that when the Ukrainian thing is resolved, whenever that is, our Federal Reserve is going to be faced with the issue of Jerome Powell has indicated that we're getting a quarter point. They meet next week. Mm-hmm. I'd say it's a 90% probability or greater, or call it 80%, that we get a 25 basis point tightening in the Fed funds rate. What do you think that does, Rudy, in terms of stopping inflation? Quarter point increase.
I don't think it'll phase it. I think once the ball starts rolling on inflation, it will take at least 1.5 years to stop it. It's just because everything is so out of whack right now, mostly with fuel and shortage, supply chain, fuel cost, even labor shortages. And so until you really get that into play, they would have to raise interest rates a lot to slow it down. And if you raise it too much, we're going into a recession. Right. So it's a delicate situation out there.
I think that Fed Chairman Jerome Powell and all of his cronies are faced with perhaps the most difficult policy decisions to make perhaps in the history of the Federal Reserve. And I was reading, I think you could liken this period, see if you remember this, Rudy, back in the oil embargo days back in 73, 74.
Yeah, I had hair
then-
down to here, and I was in high school.
Yeah. So yeah, you had like an orange afro.
Yeah.
I heard. Yeah.
I looked like a bozo. I tried to comb it over my ears, and it looked like earmuffs. And I had red hair back then.
So no, in 73, 74, we had the Syrians and the Egyptians wanted to try to do this land grab thing from Israel, and they were all of their tanks were annihilated, and oil prices skyrocketed. And then again in 1982, we had a bout with stagflation. Then, but I mean, we had the Paul Volcker. I think the interest rate peak was around March of 1980, and we had inflation, for a while. So I'm with you. I've even wondered if it might be the Fed's goal intentionally to let inflation really run, because our debt to GDP, our we have $30 trillion in debt,
I know it.
and our debt to GDP has more than doubled since I remember the last year under Bush. We were at 62% debt to GDP, and I think we're around 115, right now. So pretty close to a doubling of that. And if you had 10% inflation for 7 years, that would have the effect of cutting our debt in half.
Right.
So what would you want to own, Rudy, as an investor? What types of things would you want to own in that kind of climate? And a corollary question to that would be, yeah, I'm just thinking. So what would you want to own, and do you agree that we're going to be in this predicament, for a while?
I would definitely want to own some hard assets, like some real
Yeah.
estate, some commercial real estate, farmland, if you could get your hands on it, which would be very difficult. But definitely that, and of course a mixed a percentage of gold and silver,
Mm-hmm.
maybe some palladium and some other commodities.
Mm-hmm.
And I would be selective on stocks.
Mm-hmm.
Stocks like that are inflation resistance.
Mm-hmm.
That if you do have inflation, they're able to move their prices up with it.
Mm-hmm.
So I'd be,
Yeah, there you go.
more.
No, and that's really kind of, I'd just like to say to our viewers, and we've had Rudy has been one of our most aggressive clients here, really, and we've had extraordinary success in the last couple of years. But now that you just officially you've gotten retired in the last month,
Mm-hmm.
and we're moving, more conservatively. So he's a typical client that is facing some of life's transition, and hopefully a lot more fun, a lot of traveling, a lot of
yes,
fine dining,
a lot of trips
and
planned.
yeah, a lot of time with Velma, your wife, and enjoying some of the finer things in life. But so we would say you don't want to own long dated or long duration assets that are going to be impacted by long-term interest rates trade off of inflationary expectations. And I actually believe we've had a little back and forth and office debate about this, but I think that the biggest bubble in the financial markets right now is long-dated bonds.
Mm-hmm.
And I don't know why. The 30-year Treasury bond closed today to yield 2.36%. And if it were to trade up to 3.36%, 1% higher, you lose about 20% of your principal, immediately with that trade. So we like short-term investment grade, predominantly investment grade stuff BDCs, business development companies. We've had some real success
Yes,
with
we have.
2 of those. And
The Riley Bees. Have been
yeah,
very
the
successful.
baby bonds.
Mhm.
Don't give away our trade secrets. Yeah. So as we've got viewers that are watching that haven't opened accounts with us yet. So yeah, I'd like to say if you have any questions about, and I would say this is our portfolio that we're using right now with the S&P down another percent. We're going into the weekend with the S&P 500 down 12% so far this year. And our portfolio is our clients are anywhere from break even to down 2 or 3. We have some clients that are up a fraction even. So if you'd like to fire some questions at us or give us a phone call, and it's a great time, don't you think, to be taking a look at things given the instability in the world.
Yes.
And even have a portfolio review. We welcome you for that. So I think you have any questions, or Rudy, or you got to have another question or two that we might address.
Oh, no, I'm really,
Okay.
I look at times like this can be a very exciting times too. I mean, it can be depressing, but at the same time, it can be exciting for an investor. There's still opportunities to make money out there. And
I think that's, we hear all kinds of sentiment from head for the hills, the most panic stricken people. This is being kind of joking about it, but wondering if the world is going to be spinning around on its axis tomorrow. But it's really I forget who. I think it was Sir John Templeton said that we want to be fearful when others are greedy, and greedy when others are fearful. So and this is what we've done. I get phone calls from Rudy, and what do you think about this? And it's been a crazy time with the volatility because it's just been back and forth, and it has presented some trading opportunities too. But this volatility does create opportunities that we attempt to take advantage of. And I think that's one of the themes of today's show. They say that the trend is your friend until it ends. And we own an algorithm run trend following fund that's up. It's up 14.58% so far this year, and I think it will be up today, given what I saw. Crude and some of these other things that have.
we were one of the few people I knew that was promoting oil and gas.
Yeah.
9 months ago.
Yeah.
When I would see CNBC and was watching commentaries, they were so negative on it, and you were very positive. And me as a client was able to really do well during that time.
Yeah, and that's there's some like Goldman Sachs that think that we may be in a commodity super cycle, and you kind of touched on this. If crude is high and likely going higher, that impacts every commodity. It impacts food prices because you've got transportation costs, to move these things and so forth. So,
and crude's not just used for gasoline. People have to remember it's made in plastics. It's made in almost every commodity that in your aluminum.
Exactly.
I mean, it's used in everything, and so is natural gas. It's you can crack natural gas. That's what makes ammonia nitrate for fertilizer, or you can crack it to make ethylene now.
Yeah. So
plastics.
we like to thank you for coming down here and for your inputs.
Sure.
And one of the things I always like to throw in, finish it up with some sports talk. And that's, it's kind of interesting. The NCAA Division I track and field championships started today in Birmingham. Our LSU Tigers are women are ranked 4th and the men are ranked 19th. They'll be top 10 outdoors. They had some injuries, but I met Rudy. Rudy, now you went to Northwestern on a football and track scholarship.
Football
right?
scholarship, but I did
Yeah.
run track 1 year.
Yeah, you ran, but I remember hearing in high school, what you long jump 23.9, something like that in high school. And
22 about 23.
yeah, about 23
Mhm.
feet and ran the 100.
Yeah. Back then it was 100-yard dash. I think like 9.6, 9.7.
9.6 for the 100-yard dash. And that's really fast.
I was scared. I ran because I was scared. That's why I played football. The more they chased me, the more I ran. So
yeah, and then you played wide receiver under an NFL quarterback
Yeah.
at Northwestern,
Bobby Hebert.
Bobby Hebert. Yeah, and you actually introduced me to him one time at a party at your house. Yeah. So what's he doing now?
I haven't talked to Bobby in a couple of years now. I used to talk to him quite often, but as we get grandchildren and
Oh yeah,
get so busy in our careers, we don't see each other as often. But once a year we get together. Coach O also played at Northwestern with us, and
Coach Ogeron. That's right
at LSU. And that was Bobby's roommate.
Oh wow, I didn't know that.
We try and get together more often. In fact, we're getting together April the 7th through the 9th down in Natchitoches, and I look forward to that. Getting to see a lot of friends.
That's cool. Yeah, and we're getting ready to see all the conferences are finishing up through this weekend, and we'll see who makes the March Madness 64 basketball college playoffs getting ready to start here. Well, we really Wesley, did anyone fire a question at us back there?
Negative.
That's a negative. Okay. No questions today. We really appreciate you watching and hope you got something from our show today. We're looking forward to having Bill back, but in his absence, Rudy, I just want to thank you for joining us today.
Thank you. I enjoyed it.
And
thank you for what you've done for me.
Oh, thank you, man. I really appreciate that too. So give us a call if you have any questions or comments, and don't forget to move your clocks up an hour this weekend. So we're going to lose an hour of sleep. Have a great weekend. Thank you.